Listen up, this is a story about steel, and steel means America. Cleveland Cliffs, a titan of American steel making. But lately, the stock's been taking a beating. Investors are worried, seeing red. The market's been a roller coaster. Inflation's cooling off, but recession looms. When the economy gets nervous, industries pump the brakes. That means less demand for steel. But Cleveland Cliffs is a survivor. They've been through booms and busts. They're battle-tested, not going down without a fight.
Now, I'm not going to sugarcoat it. Cleveland Cliffs is facing some serious headwinds. Some analysts are throwing in the towel, downgrading the stock left and right. They're worried about falling steel prices, rising input costs, and the overall economic uncertainty. The competition's no joke either. Cheap steel imports are flooding the market, putting pressure on prices. And let's not forget about the elephant in the room, China. Their economy is slowing down, and that means less demand for raw materials, including the iron ore that Cleveland Cliffs produces. It's a tough environment, no doubt about it. But remember, this is Cleveland Cliffs we're talking about. They're a fighter, and they've got a plan.
All right, let's break down the numbers. Cleveland Cliffs' recent earnings report was a real mixed bag. Earnings per share missed the mark. Revenue came in lower than expected. Not exactly what investors wanted to see, but hold on, don't jump ship just yet. There were some bright spots too. EBITDA, a key measure of profitability, actually beat expectations, and the company reaffirmed its full-year guidance, a sign that they're confident about the future. Look, nobody's happy about missing earnings estimates, but sometimes you gotta look beyond the headlines and see the bigger picture. And in Cleveland Cliffs' case, the bigger picture is one of resilience and a commitment to navigating these choppy waters.
So how are they going to turn things around? Simple cost cuts and buybacks. Cleveland Cliffs is slashing expenses, squeezing every penny out of their operations. They're also buying back their own stock, a clear signal that they believe it's undervalued. These buybacks are huge. They're telling Wall Street, we believe in our company and we're putting our money where our mouth is. It's a bold move, and it shows that management is serious about creating value for shareholders. Plus, don't underestimate the power of a good, old-fashioned turnaround story. Everyone loves a comeback, and Cleveland Cliffs is setting the stage for a major one.
Section 5. Cheap as steel? Valuation says maybe. Now let's talk valuation. Right now, Cleveland Cliffs is trading at a significant discount to its peers. Their price-to-earnings ratio is dirt cheap, and their enterprise value to EBITDA multiple is screaming undervalued. Look, I'm not saying the stock's gonna skyrocket overnight, but at these levels, it's hard to ignore the potential upside. Even a slight improvement in market conditions could send this stock soaring. And let's not forget about their debt. Cleveland Cliffs has been aggressively paying down debt, which strengthens their balance sheet and makes them less vulnerable to economic shocks. They're playing it smart, and it shows.
Green steel. The future is bright and sustainable. Green steel is the future. Cleveland Cliffs leads this revolution. Electric arc furnace technology is a game changer. It's good for the environment and business. Governments demand green steel. Cleveland Cliffs is ready to supply.
Section 7. Risks remain. Steel's a cyclical beast. Now, I'm not going to lie to you, there are risks. The steel industry is notoriously cyclical, meaning it's prone to booms and busts. A prolonged economic downturn could hurt demand for steel, which would impact Cleveland Cliffs' bottom line. And let's not forget about those pesky analysts. Some of them are still skeptical, and their negative sentiment could weigh on the stock price in the short term. But here's the thing. Cleveland Cliffs has proven time and time again that they can weather the storm. They're a survivor, and they've got the experience, the strategy, and the guts to overcome these challenges.
Section 8, bottom line, buy Cleveland Cliffs on this dip. So, what's the bottom line? Cleveland Cliffs is a high-quality company trading at a bargain basement price. They're facing some short-term headwinds, no doubt, but they've got a solid plan to navigate the challenges. Their cost-cutting initiatives, share buyback programs, and commitment to green steel production position them for long-term success. And with their attractive valuation and strong balance sheet, I believe Cleveland Cliffs represents a compelling buying opportunity for medium-term investors. Don't be scared off by the recent volatility. This is a chance to buy a piece of American manufacturing at a discount. Remember, fortunes are made in times like these when others are fearful and you're greedy. Cleveland Cliffs is a buy!